Welcome to Anafram Market Perspectives.
Welcome back to Anafram Market Perspectives, where we break down the stock market, key economic trends, and major earnings for the week ahead. If you're new here, make sure to hit that subscribe button and turn on notifications so you never miss an update. We are here to help you navigate the markets with clear insights, data-driven analysis, and a look ahead at what could move stocks in the coming days. This week, we have a lot to unpack. The market has been volatile, economic data is shifting expectations, and earnings season is still in full swing. And of course, stick around till the end for our bonus section, where we'll analyze 2 stocks and an ETF to watch, using technical indicators to spot potential entry points. So let's dive in, starting with S&P 500 market performance. S&P 500 market performance. It has been an uneven week for the S&P 500, with some sectors showing resilience while others continue to experience pressure. Technology, consumer discretionary, and communication services struggled, while healthcare, industrials, and financials showed relative strength. Starting with technology, one of the most closely watched sectors, we saw a mixed performance. NVIDIA rebounded slightly, gaining after a brutal sell-off last week, but its gains remain fragile ahead of its earnings report. Microsoft, Amazon, and Meta all pulled back as investors took profits in mega-cap stocks that have led the market rally for months. Meanwhile, Apple stood out with a solid performance, gaining over 1% as expectations around its new product launches kept sentiment strong. In the consumer cyclical sector, Tesla remains under pressure, losing ground once again as concerns about EV demand and shrinking profit margins persist. Amazon also saw a pullback, with worries about slowing consumer spending weighing on retail names. However, Nike surged, supported by strong earnings and optimism about international expansion. The communication services sector also struggled, with Meta dropping sharply amid concerns about advertising revenue and increased competition. Google, on the other hand, posted modest gains, with analysts citing its dominance in cloud computing as a key growth driver. Despite the weakness in growth stocks, healthcare and financials held up well. Merck and Johnson & Johnson posted strong gains, benefiting from investors rotating into defensive sectors. In financials, Berkshire Hathaway stood out, rallying nearly 4%, supported by strong earnings and a boost in insurance premiums. Key takeaway? Investors are showing caution after months of rallying tech stocks, shifting into defensive names while keeping an eye on upcoming economic data and earnings reports. Key economic data that could drive market moves this week is packed with critical economic data, which could shift market sentiment significantly. The week starts with consumer confidence data, expected to decline slightly. This is important for retail and consumer discretionary stocks, as it gives insight into whether consumers are feeling confident enough to keep spending. A big miss here could spell trouble for companies like Amazon and Home Depot, while a surprise beat could inject optimism into the market. Later in the week, we get the Federal Reserve's preferred inflation gauge, the Core Personal Consumption Expenditures Index. Inflation remains one of the biggest questions for the market right now. If inflation ticks higher than expected, it could push back expectations for rate cuts, leading to pressure on high-growth sectors like technology and consumer discretionary. Housing data will also be front and center, with new home sales and pending home sales reports due. The housing market remains under pressure due to high mortgage rates, but home builder stocks have been surprisingly strong. If sales come in better than expected, it could provide another boost for companies like Lowe's and Home Depot. Internationally, we will be watching China's manufacturing data closely. With global demand softening, China's economic slowdown is being closely monitored by commodity markets and industrial stocks. If manufacturing activity contracts further, we could see renewed selling pressure in materials and energy stocks. Key takeaway? Inflation, consumer confidence, and housing market trends will play major roles in shaping the market narrative this week. Watch for any surprises in these reports, as they could change the outlook on interest rates and overall market sentiment. Key earnings to watch this week. This week is packed with major earnings, and these reports could dictate market movement in various sectors. On Monday, we'll be watching results from Zoom and Domino's Pizza. Zoom remains under pressure from competitors like Microsoft Teams, and investors will be paying close attention to its AI-driven initiatives and enterprise adoption trends. Meanwhile, Domino's is a great indicator of consumer discretionary spending. Investors will be looking for insights into how inflation and wage pressures are impacting profitability. On Tuesday, the focus shifts to Home Depot and the Bank of Montreal. Home Depot is a key stock for understanding trends in consumer spending and housing demand, particularly given the high mortgage rates impacting home renovation trends. The Bank of Montreal's report will provide insights into credit risks, interest rate sensitivity, and loan growth in Canada. On Wednesday, all eyes will be on NVIDIA. This is the most important earnings report of the week. The artificial intelligence boom has driven explosive growth for NVIDIA, but the big question now is whether that growth is sustainable. Any hint of slowing demand or supply chain concerns could send the stock plummeting, while strong guidance could spark a major rally. On Thursday, we'll be looking at earnings from Royal Bank of Canada, Toronto Dominion Bank, Dell, and Autodesk. Dell's report will be particularly important as investors are looking for signs that AI-driven computing demand is translating into stronger sales. Meanwhile, the big Canadian banks will provide a read on the overall health of the financial sector in North America. On Friday, the focus shifts to global earnings, with Allianz, BASF, and Amadeus IT reporting. BASF's results will be closely watched as a leading indicator for the global industrial economy, and any weakness here could signal slowing global demand. Key takeaway: NVIDIA's earnings will set the tone for the technology sector, while retailers and banks will provide key insights into consumer strength and financial stability. Bonus: 2 stocks and an ETF to watch? All right, now for the bonus section, 2 stocks and an ETF worth watching. Remember, this is not investment advice, just insights based on market trends. NVIDIA remains the stock to watch, especially after its recent volatility. Based on Ichimoku Cloud analysis, the stock is below the cloud, signaling bearish momentum. A break above key resistance levels could signal a reversal, while a continued downtrend might suggest further consolidation. Home Depot is another critical stock this week, particularly given its earnings report. The MACD indicator suggests bearish momentum, but a crossover could indicate a potential bounce. And finally, the Vanguard S&P 500 ETF remains a great long-term play for investors looking for broad market exposure. While it's currently trading below key resistance levels, a broader market recovery could present a strong buying opportunity. That's it for this week's market preview. What stocks are you watching this week? Let me know in the comments. If you enjoyed this breakdown, don't forget to like, subscribe, and turn on notifications so you stay updated. And don't miss our Friday market recap, where we'll analyze the biggest market moves of the week. Stay connected with Anafram Market Perspectives. See you next time, and happy investing.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives. Next time on Anafram Market Perspectives.